Hi, Peter Jones, Chartered Surveyor, author and property investor. And in this short series of videos we're looking at 10 things which I've learned in property over the last 20 years. Now the last one, number 3, was that you don't have to use your own money. The money you use just doesn't have to be your own. And a related point, number 4, is that you don't need to run out of money. Or at least, put another way, you don't have to stop buying property. Because I realise that I've listened to some very experienced and very knowledgeable property investors who have said blanket statements like, at some stage you're going to run out of money. And I've listened and I've nodded, it sounds very wise, and I've agreed. Now I know there are times when I can be a little bit dim, but I was thinking about this and it's just suddenly occurred to me, hang on a second, although I'm agreeing that at some point you're going to run out of money and you're going to have to stop buying property, I'm still buying property after 20 years. And that's from starting with a pot of money which was equity, which I released from my own home. I'm still buying. Now the truth and the reality of the matter is, of course, that I've been helped by market movements because prices have increased, the value of my property assets over time has increased, and I've been able to take that equity out and use that money. But does that matter? The point is, I haven't yet run out of money for buying properties. Now, there are times when I don't have any money. And, okay, that's a bit paradoxical because I've just said I haven't run out of money. But of course, there are times when I'm completely spent out, when all of my available cash is gone and I don't have any more. But what do? Well, I follow the model and I refinance. I refinance knowing that because I bought a particular deal I was able to refinance, or I was going to be able to refinance, or I've waited for market movements and the value of properties to go up so I could then borrow the equity out. The point is that although I've been nodding and agreeing and saying, yeah, at some stage you're going to run out of money, the reality is you don't necessarily have to run out of money, but you need to be very strategic about how you buy and plan how you're going to buy and make sure that you buy properties that fit that strategy. Now, of course, what could you do if you did run out of money? Well, the obvious answer is you just get some money from somewhere else. Remember in video number 3 we looked at the fact that the money you use doesn't have to be your money. There's no special prizes for only using your own money. In fact, actually it's the opposite, isn't it? Because you'll do worse, or you won't do as well as if you're prepared to be a bit more flexible and use other people's money. Now, in this day and age, it's relatively easy to find people who want to invest in property as your JV partner. Quite often they'll be happy to be a sleeping partner in your property business. It wouldn't necessarily have to be even in your property business, that they may come in and finance specific deals as a one-off. There's very many people out there who are getting poor returns on their money, and if you were to offer them even just a nominal amount of, say, 5%, 6%, they'll probably bite your hand off because it's been much better than the 0.5% they're getting in their ISA. By the way, a point here, when you're asking a JV partner to invest in a deal, always let them suggest how much interest they want you to pay. You may go in thinking, well, I'm going to be generous, I'll offer them 10%, but I know of people who've offered very generous amounts of interest thinking that that would persuade the JV partner to invest in them. But actually all it's done is made the JV partner very suspicious, thinking, well, nobody can possibly offer a return that high. So ask them to tell you how much of a return they want from the property. Talking about a simple interest loan here, which is by far the easiest way of doing any JV anyway. Keep things nice and simple. But they may well shock you. They may surprise you by saying something like, well, do you know what, if you could give me 5% a year, I'd be very, very happy with that. You might have been thinking you might have to pay them 10% a year. So there we are. Do we have to run out of money? No, we don't have to run out of money. If we do run out of money, does that mean that we have to stop buying? No, it doesn't mean we have to stop buying, because we can then access other people's money to make up the shortfall. So there's always a way. So again, one of the things I've learned over the last 20 years, there's no reason to stop buying. So I hope you found that helpful. Here's to successful property investing.